So Dan,
Yep.
in previous videos, we talked about e-commerce sites.
Mm-hmm.
You know, with e-commerce sites, you can't feed a dollar bill into your old laptop or your phone.
Yeah.
You know, so we're dealing with electronic
Yeah.
payments. Electronic payments is credit cards.
Yep.
And man,
Okay.
credit card companies make money
So-
off of payments, don't they?
So
How do we help people save?
when we started the business, really over 20 years ago, we were software developers, and the very first thing we built was an e-commerce system for 80,000 products. We had over 1 million users, and we commanded that particular industry all across the entire world. But what happened was we were instantly thrusted into First Data, all of these merchant systems. Like we were software developers, think about this, and we had to figure out how to work with the credit card processing companies. And we did this way before what I'm going to tell you, or could be some of the pitfalls, way before it became very easy to accept credit card on your phone with a little white square thing. I'm not going to get into names. There's a system out there that makes it super easy. Well, I'll just say PayPal, I don't care. But
Hey, pal.
PayPal. So here's the thing. PayPal is very good, but you will pay higher fees.
I'm not your pal.
Right. But I'm going to say this. You absolutely need PayPal on your website.
Oh, yeah.
So it has to be an option. It shouldn't be the only option. The reason why it needs to be there is because people trust it and they don't trust you. So you have to have it there. It's also, honestly, sometimes I'll go buy something on a website and I literally use PayPal because I don't even want to whip out my credit card. Like I just want to be that lazy and I just log into PayPal and buy. It's just easier. So PayPal should be in there, but you are going to pay higher fees. This is what I'm going to tell you. How do you reduce your fees in your shopping cart? The best way I can describe it to you is if you haven't gone through underwriting, almost like getting a loan for your house. If you haven't gone through a 2-week wait period with your bank and went through underwriting and they came back with you with a rate that you can then use on your shopping cart, then you're not getting the lowest rate. That's the best way I could describe it. Now, if you go to Apple and you go to the store and you pick off the product on the shelf and it says you can start accepting credit cards in 5 minutes and you got that product and you're like, cool, you're going to pay the highest rate. Why? I love giving the why, because when people understand the why, they then understand the mechanics and they appreciate it. When you, even shopping carts, there's shopping carts that you can buy and you can instantly accept credit card. What happens is you're rolled into the risk part of that interest rate. So you are rolled in with all those other people that went and bought that product off the shelf and defaulted on their credit cards, their payments. And so that rate is a higher rate for risk. And they don't know you from anybody. And because they're not doing extensive background checks, they have higher rates to cover the losses from all the people that default. I'm not saying that you're a person that would default on payments and all that kind of stuff, but when you go through underwriting and you get a rate that is very specific to your credit record of your business, you can get a lower rate. And here's another thing that's interesting. If you're a business that literally has customers come in and you sign agreements or you have a relationship with your customers, you actually get a lower rate for that as well. It's one of the underwriting measurements they have. Does your customer come in the door? Do they sign something, blah, blah, blah? If you went out and got one of those devices and you're a consultant and you're sitting in and you're using that thing to swipe the card through your phone, you're paying a high rate for nothing, because what they're really after is, and I'll just use a real world example. Let's say that you sell electronics online and somebody buys a 70-inch color TV from your e-commerce site, and then they're like, it never shipped, but you did ship it. You will get what's called a chargeback. And a chargeback is, well, the customer said it never shipped. Even though you shipped it, you're out $1,000, right? Well, those are all risk. That's all risk. And now if for some reason you can't pay back that $1,000 or whatever it is, then it goes into almost like a loan default, right? Because now the bank fronted the money to you for that television that never made it or whatever happened, but you're on the hook for that. And the bank is assessing risk. So when you pull those off the shelf credit card readers and you just use them, you're basically just rolled in with all the risk of the other companies out there that might not have good business models around checks and balances on how their products get shipped and if they make it and so on and so forth. So long-winded, like over the top explanation, but I just feel like if you know the mechanics, you might actually go down to your bank and say, hey, bank, you guys have known me for 20 years. I'd like to accept credit card online. Well, guess what? This is what's kind of cool. Our company can work with your bank and get it wired into your shopping cart. Not all, some are closed shopping carts, but most of them we can actually completely bypass and you won't pay $800, $1,000, $3,000 a month in merchant fees. So when you're starting to see those high merchant fees every month, I know even with us, and we're good at it, we're at like, I think it's like $1,000 a month and we're at a low rate. So I can only imagine what it looks like if you're at a high rate. And you have high volume.
So I mean, basically, if you're anticipating building a shopping cart for your website and you haven't had the conversation yet internally or with your team about how you're going to accept payments and what your rate's going to be, have a conversation with us. If you've got an existing website, an existing cart, and you don't know what you're paying or you're getting creamed by high fees and you want a better solution, we can have the conversation about putting something together for you that makes better sense than what you're going through right now.
The other thing too, just kind of put a button on it, is every e-commerce site we build, we push our clients through a real bank and say, look, for the next 2 weeks, you're going to work with our rep and they're going to get you the lowest possible rate. So in our world, when clients come knocking on our doors for e-com, we already put you through the channel, not the quick, fast, easy, I just want to build your e-com and get you guys out the door. We literally help you save thousands of dollars by not making that mistake. Hopefully that helps you out.
Thanks, everyone.
Take care.